Welcome back, everyone. It's been a while. Recently, I think the question that's been on many minds, certainly been on mine, is the question of inflation. And so today I'm going to go through some of my macro thoughts, and in a video I've titled Inflationists, Deflationists, and Bikers. Now, okay, it's not bikers, it's cyclists, which isn't generally a word that we come to think of when we're talking about markets. But I really think that in this case, in this market, if you look at the past, I don't know, however many years really, because it's a repeating thing, markets have cycles. And these cycles, one of the drivers is inflation to deflation. And I mean, sometimes it's inflation, you could have an inflationary recession. You could also have a deflationary recession, which is more common. And so I've had a theory for a while now that the inflation that we're seeing in markets, and this is what today's video is going to be about, the inflation in markets is a lot to do with temporary supply constraints. And really, I've been looking for a lot of reasons why I should be wrong, why this is the beginning of a long-term inflationary boom that will take a lot of things with it. And problem is, I haven't really been finding evidence that supports that. I've been finding more kind of reasons why my theory is more likely accurate and the number of implications that might have. Now, again, didn't really want to make too many videos about this in the interim because, again, I could be wrong, and this is just mainly a bet based on odds, and it's kind of been what I've been saying recently in recent videos as well, and there's only so many ways I can express the same view, especially while I'm tweaking it as we go along based on stuff that comes along. So I've also been looking at recently what different trades there are in the market, and there's probably less than many people would think, in that a lot of things kind of act like the same thing, whether they should or they shouldn't. And so I'm trying to figure out how I'm actually positioned and what are the risks associated with that. And in the meantime, in the research, one of the places that I've been more active, if not on this channel, has been on Twitter. And on Twitter, I was kind of wondering how people were thinking. So one of the things I did is I made a poll. And now, granted, the audience that follows me is not the most diversified in terms of many people are probably commodity bulls. But still, I asked over the next 12 months, are you more an inflationist or deflationist? And yes, there's problems with the question in terms of the possible answers are just those two, and there's many layers in between. But the way I asked it, I thought I know how I'd answer, and I just didn't want a lot of noise of this then that type of thing. But the answer that I got was around 90% of people, now that's a majority, were, or responded at least, that they were inflationists more over the next 12 months. This was alarming to me because when I thought the poll, I thought the answer that I would clearly give is deflationist. Now, this isn't because I necessarily think that deflation is coming, but more so, and I'll get to this in a second, I think inflation is peaking. So I think a lot of the concern around runaway inflation, there's a lot of evidence that kind of would counteract that. And I think there's a lot of temporary things that are contributing to the inflation narrative. Now, more recently, there was an institutional survey which found that they believed that the majority there believed that inflation was transitory, which, I agree with, and through my own conclusions. But the same survey pointed to, by their metric, commodities being a crowded trade, which I also see some evidence to. And that's one of the reasons, really, why I've been spouting nonsense about caution. We got a lot that pushed the inflation narrative. And I'll get to the specifics in a bit, but the forecast we went from pricing in deflation, economic collapse, shutdown type of environment to one of the fastest, if not the fastest, economic acceleration ever. And you have all these year-over-year charts that went from like -2% last year to plus 10% this year. That's GDP, or sorry, this year being 20 expectations this year. And, you know, you think, wow, that's a lot for GDP, plus 10%. Maybe this is the beginning of a boom. But then you consider, okay, -2 last year, plus 10 this year, so it's an average of 8, actually 8.1. Divide that by 2, and it's 4% nominal GDP. And that's really what we've had for the past 10 years, more or less. And so a lot of the surge that we've seen is mean reverting, and if the mean reversion continues, well, then it's probably mean reverting in the opposite direction. And I think that that stands a chance to be a headwind in a number of the sectors that have been really well performing recently. Because what have we seen in the past year when everything was shut down? Well, we saw capacity constraints, we saw all sorts of disruptions, we saw stimulus into markets where people didn't want to work. All of that, while sounding quite inflationary, also sounds transitory. What happens when people can go back to work? Well, presumably some will go back to work. Presumably that means there's more supply. And how will we get people to go back to work? Well, less stimulus in terms of money to curb the curve, if you will. So a lot of these things kind of in just a simple mean reverting way takes out a lot of inflation from inflationary impulse from what we've seen. Now look, I'm not saying the inflation will instantly snap away because there's a lot of things that will linger. And one of the big ones is inventory draws. We saw, if you look at housing, if you look at automobiles, cars, we've seen large inventory draws. Now, part of this is due to the supply side disruption. There was shutdowns, there was all this stuff, which will be coming back on, presumably. And yes, there can be some additional strength in the economy for a while those inventories rebuild. It'll seem like a bit of an extended boom. But once that's all said and done, you have to remember inflation is a rate of change type thing. So with all of this boom, we had 5% CPI and 6% CPI. Are we going to get another boom? Are the prices going to keep running, or is supply going to fight that? Now, look, we can easily say what we've seen in the past 12 months. You know, you could count it on the CPI, PPI, whatever you want to look at. It's been inflationary for sure, and there's been stimulus for sure. But the question has to become, if this stimulus, if everything that's happened has proven to be 5% inflationary, well, A, will it continue forever? And B, if it doesn't, does that mean the inflation goes away? And that kind of gives us a new way of looking at, well, do we actually have an inflation problem? Because I don't think, first of all, that the 5% is going to continue. Might not go to negative, but we look at all of the stimulus and, you know, is it having an effect? Sure. Is it the solution? Well, what's the flip side of all the stimulus? More debt. And in the past, has more debt been more or less inflationary? Well, debt has been deflationary. And it ties other parts of the economy down also. So it becomes hard to see inflation accelerating from here which means either tapering or diminishing. Which leads me to May 10th. Now, what happened May 10th? I honestly don't know what caused this or if it's actually going to prove to be accurate, and there's some good reasons why it may not be, but I'm kind of thinking inflation peaked on May 10th. I understand how random and uncheckable and pointless that saying that is. So here's my reasoning. Well, 5 days later, Barron's had a cover about inflation. No, I'm just kidding. That's not my reasoning, but in terms of contrarian indicators. Anyway, the real reason is if you look at a lot of different commodities, commodity-related equities, just in terms of pick random things, pick as many things as you can look at, and look at May 10th. Well, oddly, a lot of uncorrelated, seemingly uncorrelated things all kind of put in a high on May 10th. You had lumber, you had copper, you had the DBA, you had like food, all put in a high on May 10th. That's odd. And particularly when we're looking at the equities of even some commodities that didn't put in a peak on that day, it leads me to believe that that was a point in markets where something changed. Now, could I be wrong? Very easily could be wrong on this. But when I just look at how the market kind of sees these things and looking at, well, we saw the CPI, we saw the data from May, and it was record or near record when it comes to inflation. So, which leads me to think that likely a peak. Add to that, well, some commodities are significantly off that peak, so that's lower, harder for the PPI to continue that pace. We'll see. Actually, we won't, because we'll never know specifically what day, but it's kind of my working theory. However, the last great bull case, we'll call it, for the persistent inflation is oil. Now, oil and energy more broadly has been rather strong in the face of a lot of the commodities kind of coming off their peak. And, while the futures curve still tells a different story for oil, I definitely see the argument and agree with it that in the very short term, there's a lot of stress, a lot of things getting better at a quicker pace, a reopening, and uncertainty around how much demand we'll actually have in the short term. So I can see the bull case for oil there. Where I struggle more, and where I kind of have a consensus view, if you will, is to look at the futures curve. To me, this says, yes, we know costs are down, and maybe there is, some ESG related inflation there that's coming in the future, but you can make money at $60. So why should the price be 80 or 100 when you can, if the futures price was 80 now, well, then I think they would hedge, and they wouldn't need the price to be at 80, so that's why it's not there. And so that's kind of my thinking with oil. But as long as energy remains strong, remains going up in price, well, then that's one form of inflation. So, I'm not a bull. I'm not necessarily a bear. I think I'm pretty neutral on energy. The fundamentals aren't strong enough for me to be bull. I think the price is also well above where I would have the cycle midpoint, so not really a bull for that reason too. But shorter term fundamentals aren't weak enough for me to be a bear. And look, I probably will be soon, but not yet. And it's how markets work. I'm just not seeing I'm not agreeing with many of the stories that I've seen for why you need 80, 90, $100 oil or more for an extended period of time. The payback is too quick on investment, and yeah. Now I do want to talk a little bit about dirty energy. So dirty energy broadly, which is kind of the inflation case that I was making before, the last great strong bull case. The prices, I think, are broadly high, but for the time being, I think there's hesitancy to make investments. Now, I'm not a buyer of the capital constrained argument, because if you look at the price that some of these energy companies can get on their bonds, there's plenty of bonds, there's plenty of money that's available to them in terms of debt. But I think they are also scarred from making mistakes in the past. So that is the thing that I think is holding up the global inflationary argument, the hesitancy of dirty energy to invest. If you needed another reason to hate the big oil, if you will. But anyway, that's kind of how I'm seeing things right now in terms of dirty energy. And so I think a lot of supply growth is very possible at these prices, but obviously not if no one's spending any money. And the one point I want to harp on a little bit is that I think price matters a lot for both supply and demand. And that's something that I've kind of seen. It seems like a lot of people are ignoring that factor, because I think there's a lot of potential for supply, and I think that demand would be higher at lower prices. So a bit of brief commentary on the CPI reading 5%. You know, the bondholders reacted to the news that they were smoked. Well, they bought more bonds. Bonds did not react negatively to that presumably negative news, which is further kind of pointing me towards thinking, okay, where are we heading for inflation? Are we heading higher from here, or are we heading lower from here? If we are indeed seeing a deceleration, either last month, this month, next month, some point this summer, which is kind of where I've been thinking for a while, some point this summer, I don't know if it's happened, May 10th, maybe, but maybe not, maybe June, maybe July, but later than that, I very much doubt it. But the markets are supposed to be forward-looking, and the markets are also very sensitive to inflation trade and that type of thing. So if the markets are forward-looking, if inflation is decelerating, presumably they would figure it out and wouldn't like that. And that's kind of the action that I seem to be seeing. So what's my call with all this meaningless ramble? Well, I think that May or June is the highest probability for being the peak of inflation. And I think that the unwind of that peak inflation, of that inflation trade, maybe if we go from 5% inflation down to 4 or 3.5 or something like that, I think that commodities generally won't like that. And if not commodities, perhaps commodity equities, because it, is no longer looking like runaway inflation. Now, I'm not saying we're going to deflation. I am more an inflation bear than a deflation bull. But the most likely reason for why that would prove to be incorrect is if oil continues to march higher. So in this fading inflation trade, it's more of the same. I mean, know what you own, know why you own it, what's your time frame, what would you do if something fell significantly for no reason. And the last thing is, this is what my thinking at the moment, but I don't know how long this stance will last. I kind of see 6 months at least of once post peak where it will be tough sledding, but I don't know what happens next. I think that working off the overbought situation in commodities may present a cyclical-like downturn, and for the bulls it may present an opportunity, but I don't know how deep it will be. I don't know how long it will last. I'm just thinking that we've basically seen a lot of inflation arguments come to life, and some of them are probably going to start fading, so some of the people that bought commodities because of inflation might fade as well. So what are the portfolio implications for this type of stance? Well, you've kind of been seeing it with how I've been talking for a while and what I've been hesitant to buy and more likely to want to add to. If I'm right, probably want to reduce some exposure to commodities, cyclicals, and things that are levered to high beta economic boom times. And you'd want to, well, I wanted to at least add to the more safety trades: gold, real estate, utilities, boring trade. As a general rule in which direction I've been taking the portfolio, this is not a single snap from one side to the other. Look, overall, this is just the stance I have and the thing that I think is most likely. As always, I could be wrong. And as always, it's very hard, if not impossible, to know exactly when. Is it 1 day, 1 month, 2 months? I don't know. But I think by the fall, it's going to be fairly apparent that inflation is rolling over, and I think that the market will be reacting in some form to that, at least by then, if not earlier, because the market is forward-looking. So by the time we see the data, the market might be knowing it. Anyway, that's all for today. I think I ran a bit longer than I anticipated. But as to why I called this video Inflationists, Deflationists, and Cyclists, the market is more full of stories than reality. And, some of them might turn out to be true, but mostly, you'll hear the same story over and over and over. And when things go against it, it seems wrong. And when things go with it, it seems right. And, all of this is my opinion on what will happen. There's plenty of stories out there, and so this is an opinion. It's not investment advice, and I try to look at things through a full grasp of what a cycle is, as opposed to inflation is something that always lasts this long and prices always go up this much and then always go down this much after and takes this long. I try and focus more on what might drive the cycle and less on the story of why I'm about to make so much money so easily. But anyway, with that, I wish everyone a great day. Again, thanks for watching, and until next time, good luck.